Hello students. In this session we are going to discuss subsidiary books. Subsidiary books are the specific purpose books which are used for recording specific business transactions. Just imagine when there are so much of transactions voluminous in nature and bulky in nature, and all the transactions, if it is recorded in one journal book, it is very difficult to identify and summarize. Instead, when we prepare a special journals or subsidiary books, it helps us to identify specific type of transaction, as well as the separate books helps us to simplify the voluminous and summarize the transactions. The different types of subsidiary books are purchase book, sales book, purchase returns book, sales return book, cash book, bills receivable book, bills payable book, and journal proper. Let us start understanding one by one. Purchases book. It records all credit purchase of goods and materials. Please note, only the credit purchase of goods are recorded in this. Cash purchases are not recorded here. So cash purchases directly goes to the cash book, and credit purchase of capital assets or fixed assets will not be appearing in the purchases book. So individual items of all the credit related purchases will be mentioned in this book, and trade discount has to be ignored while recording the purchases entry. The next one is sales book. In this sales book, we record all credit sales of goods. Cash sales are not recorded here. And also credit sale of capital assets or fixed asset will not be recorded in this book. And also we have to ignore trade discount, and only the net amount has to be disclosed in the sales book. Next one is purchase returns book. We record transactions relating to purchase returns made to suppliers. Please note, only the credit purchases what we made earlier, only in such case where we have made purchase returns now have to be entered in this particular book, whereas cash purchase returns is not included in this. Similarly, sales return also, we record transactions relating to the sales return made by customers which were done on the credit basis earlier. Cash is again not involved in this case. So cash sales returns will go to cash book and not in the sales return book. Whereas the next type of book is cash book, where we record cash transactions, bank related transactions, and discount related transactions. There is a separate chapter called cash book, which we will be discussing in detail the cash book related transactions. And whereas with respect to bills receivable and bills payable book, we will be discussing in detail with respect to the bills of exchange chapter. So we are skipping it as of now. So the next one is journal proper. Journal proper is used to record those transactions which cannot be recorded in any of the specific subsidiary books which we discussed till now. So it is basically a residual subsidiary book, wherein it records the residual transactions like opening entries, closing entries, transfer entries, adjustment entries, rectification entries. All these will appear in the journal proper. So what are the advantages of subsidiary books? So it gives information of each transaction class relating to a specific transaction type available at one place. It helps the accountant in division of work amongst a number of clerks, since there will be separate books for recording various transactions. Specialization also helps in where the same work is allotted to a particular person over a period of time. So that particular accountant acquires full knowledge and will be efficient in handling those transactions efficiently. And also it saves a lot of time because the use of number of books helps us in work getting completed quickly. And also it will have a proper control because when the trial balance does not agree, the identifying the errors is facilitated by the existence of separate books. So let us discuss concept number 1 of Lator Academy study material, wherein we have to prepare purchase book based on the following information. Let us understand one by one whether the transaction gets into the purchase book or not. Students, remember, purchase book we record only those credit related purchases and not cash related purchases. And one more thing, purchase of goods only will enter and purchase of fixed assets will not enter into the purchase book. So let's start understanding the transaction. On 5th January, purchase goods on credit from Ravi Textiles, 50 trousers at 200 rupees each. So this appears to be a purchase of goods, and this will appear in the purchases book. So purchase of goods on credit from Ravi Textiles. Here it is goods and it is also credit basis, hence it appears on the purchase book. Next transaction, 9th January, purchase goods for cash from Arvind Mills. Students, here they have purchased for cash, so this will be a cash book item and not a purchase book item, so hence it has to be ignored while recording for the purchases book. Third transaction on 18th January, purchase goods on credit from Raymond. Since it is goods and also credit is happening here, so this will be appearing on the purchases book since it is goods as well as credit transaction. On 21st March 2023, purchased on credit basis from Electronic World a laptop. Students, a laptop is a fixed asset for a business of clothing and textile business. So, it will appear in journal proper, being a laptop purchased on credit basis. And the last transaction, 24th March 2023, purchase on cash basis office furniture. Students, this is a cash book item and also this is a fixed asset purchase, hence it will not appear in the purchases book. So only two transactions will appear in the purchases book, that is 5th January, purchase goods on credit from Ravi Textiles, and second 18th January, purchase goods on credit from Raymond. These are the only two entries which will appear in the purchase book, which we have to sum total it and we have to derive the total amount of purchases. So in the next concept number 2, we have to prepare sales book from the following information. Students, sales book is a book which records only the credit sale of goods. Cash sale will not appear, as well as cash sale of fixed asset will not appear. Only the credit sale of goods will appear in the sales book. So let us start discussing one by one. First transaction, 3rd January 2023, sold goods on credit to Anand. So since it is a goods and credit basis, this will appear on the sales book. Second, on 6th January, sold goods for cash to Manju Cloth Center. Students, this is a cash involvement here, hence it will not come in the sales book, it will recorded in cash book. Third one, on 8th January 2023, sold goods on credit basis from Ronald. So this will appear in the sales book, being the sale of goods on credit basis. And next transaction, 11th March, sold on credit basis vehicle. Students, vehicle is a fixed asset which will not appear in the sales book. This will be in the journal proper we enter. And the last transaction on 14th March, sold on cash basis office furniture. Since it is a fixed asset and on cash basis we have sold, this will not appear in the sales book. This will be appearing in the cash book. So in total, 3rd January, sale of goods on credit basis we enter in the sales book, and another transaction on 8th January which we have sold goods on credit to Ronald, it will appear in the sales book. So in total we have to summation the two transactions and the total sales we will be transferring to sales account. Students, I hope you have understood the subsidiary books, and in the next chapter we will be discussing the cash book. So till then, keep watching our videos, and if you like our video, please like and share it, and do not forget to subscribe our channel Lator Academy. Thank you.